It is time now for the word on Wall Street. Top investors watching your money. Joining us now is Allianz Chief Economic Advisor Mohamed El-Erian. Also with us on set today, Ryan Payne. Mohamed, good morning to you. We'll just start with you. So much to talk about with you. Right now, futures are actually in the red. As you can see, the Dow is down 161 points in the pre-market. S&P 20 down, NASDAQ down 85. Taking a look at yields right now, we've seen a little bit of a boost in the 10-year. We're now at 4.128%. And we've got a lot of econ data coming out. We've got August new home sales coming out. We've got the second and final read, second quarter GDP, the final read. And then Friday, we've got August PCE and spending and income. So all of this is really going to, I think, paint the broader picture for, in particular, the inflation story. What are you expecting and how important do you think is the data right now?
So first on inflation, I think inflation is sticky. And it's going to be sticky for a while. Okay. The reason for that is service inflation is staying high and goods inflation is going up. Overall, I don't think it's a problem because inflation expectations are well anchored. So we are living with a higher inflation rate than the Fed would want, but it's not a major problem to the economy. In terms of what happens to yields further out, it's a massive tug of war. On the one hand, markets are aware that the Fed has started a cutting cycle. Markets are worried about the labor market. But on the other hand, there's debt and deficits. So we're going to see a tug of war, and it's settling around 412, 415, which the economy can live with without any major problem.
How do you feel about where we are with inflation right now? It almost seems like the markets have gotten used to inflation at 2.5, 2.6%. James Yorio was with us last hour, and he mentioned that. And also then, of course, you've got the worries about the labor market. How does the Fed navigate that? Because, you know, there's this pressure on the Fed to cut rates. You've had expectations for maybe 2 more rate cuts. At the same time, this data this week could change that prediction.
So inflation has been above the Fed target for 5 years. It will be above the Fed target for at least another 2. That's 7. And yet, inflation expectations are stable. It raises the fundamental question, is the Fed pursuing the right inflation target for now? That's the critical question. Yeah. I think that if you look overall, we are on the cusp of major productivity gains that are coming from innovations in technology, in robotics, in life sciences. We have a deregulation process coming along. So I think we can run the economy with inflation above the target. And longer term, we have to ask the question, is this the right target? But that's part of major reforms to the Fed, which I think will happen, but after Chair Powell goes.
And markets are certainly trying to parse all of this, in particular as we go into really the fourth quarter. Investors do have a record amount of cash on the sidelines, Ryan. You've got money market funds holding $7.7 trillion. They're still taking in billions of dollars. Yields, as we just showed you, about 4%. So all of this says, and this is the Journal, that they're happy to keep on the sidelines in cash. But what does that tell you about the rest of the year?
It tells me is when do the floodgates open? Because it's the trillion-dollar question. And I think eventually investors can't help themselves. It's FOMO. It's human behavior. And if you think about it, last year this time CPI was tracking at like 2.5%. It's now gone up to 2.8 or 2.9%. So we've had inflation go up a little bit. But now interest rates are coming down. Your money market fund that paid 5% is now going under 4%. So your purchasing power is really getting limited now for when you're seeing it. And it's going to go down further if the Fed cuts another 2 times this year. So it's only a matter of when that money comes back into the stock market. And I think this is where the Fed has it completely wrong, is we already have hot stock market prices, gold prices, Bitcoin prices. You have $1 trillion of margin right now where people are already borrowing against their account. We already have an economy that's heating up, stock market's heating up, and they're cutting rates. That never happens. We're actually really risking a melt up here, and I think that's the biggest risk I see coming down the pipeline.
And there's the economic risk that he's pointing at as well, because if you do see that kind of nervousness, that pullback from the investment community, that's also the consumer community.
Yeah, I mean, my major concern on the economy is the jobs market, because we're seeing low hiring and low firing. And that's fine, but if firing steps up, then it risks spreading. The history of the labor market is that the weakening, if it continues, becomes non-linear. So we need to keep an eye on the labor market. I think that's the major risk to the economy right now.
But what would that catalyst be then to see more firing? Do you have a sense of that?
So it could be a few companies deciding this is the time to shed labor because they are seeing productivity gains. And what tends to happen is that companies that have wanted to shed labor but haven't, if they have the excuse of a general phenomenon, they tend to step it up. I hope this doesn't happen, but if you ask me what's my major concern, that's my major concern.
Okay, well, that is something that we're going to have to watch in the jobs reports and obviously the earnings reports when we start to get earnings again. Ryan, real quick with you, Saks Global is selling 49% of Bergdorf. It's $1 billion deal. This is actually just new news this morning. They're saying they're trying to cut debt, because they had the Neiman Marcus acquisition. Your reaction to that?
Yeah, they definitely need to cut debt. So that's a big catalyst for this deal right now. They need cash on hand. I know they've had trouble paying vendors, so this is clearly like we need cash right now. And that's one of the reasons why they sold. And I think it's only a percentage stake of the actual entire business and not the whole business.
Yeah, but it's certainly a major move, and there's been a lot of consolidation in that sector, so retail. Mohamed El-Erian, it's always great to see you.
Thanks for having me.
Thank you for being here with us today.
Thank
Please
you.
come back soon.